Hey traders, what's going on? Jamie Saettele here. It is February 8th, 2017, and this is the midweek strategy webinar with SB Trade Desk. We will run through the dollar majors as always, a few crosses, and I'll take questions. We'll look at commodities. I know Conwall always wants to look at nat gas, copper, and silver, so I will get to that. That'll be towards the end. First things first, US dollar in general. Put out some longer term stuff over the weekend in the Sunday update regarding the dollar in particular and the US dollar index, not DXY, and had just noticed that sometimes time is more important than price. In that, from a obviously, you don't trade necessarily time unless you trade options. But if if you have an idea, or can get an idea on when markets may be at turning points, then you don't actually really need to know where, because the time when it happens, it's just that's where you are, right? So we had been seeing a lot. We were very bearish the dollar at the end of the year, coming into the new year, and a lot of people have jumped on that bandwagon, and eventually, look, the dollar is going to head a lot lower. But I don't know if it's going to be an easy trade. I would, kind of be worried that you're going to get maybe a secondary high. I don't know if you get a new high, but maybe a secondary high, and then the seasonals really turn over in March. But for those that didn't see or just want more clarification on this, all the up legs in the dollar rally from 2011. Really, 2011 marked, the top in the commodity, complex, right? Gold top. A lot of commodities topped around then, but a lot of people think gold and silver, copper, okay, for the most part. And that's when you had your tops in Aussie and Kiwi, notably. So the rally legs in the dollar have taken on a very consistent time period. Time length, 43 weeks, okay, 43 weeks in 2013. Even the huge rally that we had back in 2014-15 took on an incredible 41 weeks, okay? And as it is now, we are in so far it's 35 weeks to the from low to high. So from last May's low to the high the first week of this year is 35 weeks. Okay. So we're in the area of maybe putting in a major turn. Again, this could be the top up here, but I don't think the market really starts down until you get into that 41, 43 week period, just based on the timing of it. And if we look at the details of the rallies, again, the magenta is the 2011 and the 2012 period. Red is the 2013 rally. They're not identical, of course, nothing ever is, but it is interesting to note that both sequences suggest a low around this point. In other words, they both, kind of are suggesting the final ending is going to be somewhat similar. So with that, I'm inclined to kind of err, if you will, on the side of dollar upside, just probably for this month, though. Right, going into next month is when seasonals turn especially bearish, the dollar, and you can see that right here. So one of the most bearish periods of the year for the dollar begins after March. So we actually go into a fairly bullish period here, and then after March 3rd, it's one of the big topping points throughout the year for the dollar. So I'm very well aware of the seasonal aspects and how that actually lines up with this, other timing analysis, if you will. All right, so there's that. Now, that's not to say that there aren't opportunities to trade on both sides of the market. And I think nowhere is that more apparent than this morning, right? I came in. I think the first thing I tweeted this morning was actually Euro is at support. This was our support. You remember the blue line? Here we are. We hit it, literally smack dab on it, and have rallied some 60 or so pips. So there's going to be opportunities to trade both sides of the market. I'm wondering if this dollar bump that we get, if we get it, is going to be more commodity currency driven, CAD, Aussie, and Kiwi, but just kind of a thinking out loud. So these are the levels that I'm looking at in the dollar or in euro, excuse me. So we've come into support and bounced today. Obviously, very low volatility right now in euro, right? I think the ATR is kind of at the lower end of its range at the moment. I can actually tell you for sure. Let's see. So I'm not just guessing. Yeah, euro 20-day ATR is the lowest it's been. The percentile is 0, meaning it's the lowest it's been in, I believe, 3 months. Yeah, so essentially lowest volatility in euro in 3 months. So that'll obviously pick up at some point when you have really low volatility, but it can last a while. But yeah, the levels to look at from a trading basis here, really until further notice, I think I would actually look at 106.70 as potential support now. Again, this might just be over the next day or two, the rest of the week. And then 107.50.60, 107.55 is actually the NFP level, and that was a high volume level, and you can see that was actually resistance on, I guess that was Monday. But that same level could come back into play as resistance. So really two levels there, 106.70 and 107. I'll call it 107.60 because the slope line is a little closer to that. But that's what I would be looking at for potential short-term trades on euro. And the long side at least has a very clear stop. Obviously, you can put a stop under if you're looking to buy 106.70. You can be looking to buy that with a stop under today's low, which is 106.40. Okay, and if I go to a real short-term chart, like a 5-minute chart, you can actually see this rally from the low today, very clean and impulsive. And again, a pullback there gives you even more confidence in buying a dip. If you get one here, buying a dip against this low here at 106.40. All right. So that is where I am with euro. Again, nothing super exciting, but great levels to work with. And again, this is the slope that I think I might have explained this last weekend. I'm not sure, or last Thursday. I don't know if I did or not. If I didn't, the slope that this is based on are these two lows. And for slope purposes, I'm treating the lows on 12.20 in euro and 12.28 as really the lows, right? These are the important lows to me. This low on the first of the year for trading purposes is a big low, but as far as drawing a trend line off of it, you know how I feel about drawing off spikes. So this is serving well, and you can see that indeed it did identify support today. So that is a good sign, and would look to be buying a dip against the low here for move higher. British pound, one that's been much more exciting and quite the mover. So here for me, really just all about the levels at this point. On Monday, when I was writing Monday's update, I really wanted to put in an entry for Tuesday, back where we got in last Tuesday, right, which was 24.15. I didn't because I was worried that this time you'd get the stop taken out at 23.65, which we would have. And it would have sucked because the market ended up reversing the whole thing. So what's happened here is we retraced virtually half, almost exactly half of the move from low to high for this year, right? It's like less than a tick off of off of the exact 50% retracement. So with that full of a retracement, you do have to wonder if this is it. Like if we've already retraced the entire, if this correction's done. Like remember we were talking about maybe getting A, B, C. Well, you have to wonder if A, B, C is already done somehow within this thing, right? So I do err on the side of buying pound here. And again, I know that goes against or is in conflict with the idea that you get a dollar bounce this month, right? But remember the long-term cycles for pound, right? And this analysis, the levels are clean, as clean as they get, especially for pound. Essentially trading right into resistance right now. Next level again would probably be around 126, but my trading focus here, aside from really short-term intraday type of scalps, is really just buying the 20-day average, which at this point, of course, lines up with the really well-defined, 20 low 124s, right? So I mean that's pretty. I want to keep it simple there with British pounds. Okay, so if we do get this bigger dollar bounce, perhaps we don't really break out to the upside until later in March or something like that. But the next few weeks could be kind of a toying situation, if you will, right? A sideways movement, which is preparing the market to take off to the upside. And in that case, in that sense, I'm wondering, and I wrote about this last night, if we're kind of in this right here, right? The two, we are looking at two different comparisons with the British pound, right? One really short term and one a little more kind of medium term. The short term one here, as you know, this is the hourly one, and basically just overlaying last week's price action with this week, and it is continuing to follow. We didn't get filled on the entry, but again, the time, oops, I moved it. The time, yeah, okay, it's still lined up correctly. The time is actually still working out. So, for example, the analog suggested that the next low in the sequence would have been due at the 3 a.m. hour, 2 a.m. hour where I am, the 3 a.m. hour in New York, so right at the European Open, and sure enough, that was the low today. Okay, didn't get our entry was a little lower on we basically had good price support, right? But it's still following it. The next high actually would be due. We had a high here. We haven't really got much of a pullback, but it does say the next high would be potentially a spike up into maybe 2 hours from now. And really, if you're going to fail on this, the ultimate possible high here, if you are going to get a bigger failure, would actually be up during European hours tomorrow, or Thursday European hours. Okay. So right here, to me, there's not a whole lot to do for cable right here. I just want to be a buyer down at support. If we continue to follow this week, and we are going to, again, this was obviously BOE last week, so there's no BOE tomorrow. So I'm not necessarily expecting this to happen tomorrow. But if we look at the other one that we've compared to, right, the medium term one, obviously you can't keep staying in a feedback loop and following, this price action forever, so it's not going to last very long. But this is the one, yeah. This would be something that could stay for a while, though, right? Where we kind of go into this contracting range period for a little longer, and then we ultimately break out towards the end of this month or into March even, right? And that would line up with the with what was talked about with the dollar and its comparison. So with that one, we might end up actually getting a good dip into either tomorrow or Friday to buy pounds, right? So don't want to chase pound strength, in my opinion. Better to buy the weakness than chase the strength, because I don't think that you're in a full-on immediate dollar breakdown scenario at this point. Okay. Might need a little more trickery. So this is one that we'll be watching. But yeah, I mean, the levels, just, respect these levels, guys. It's they're real clean levels. Okay, dollar yen, you know where I stand here. Here's the long-term chart, right? 110.75 still really lining up, it seems, as the level. We have seen, obviously, gold has taken off. When you're looking at yen, you want to look at gold, right? So gold has taken off here over the last couple of, well, really all year, obviously, but especially over the last couple of days. And dollar yen hasn't really kept up. You can see you're well above the prior highs here. So if we do at some point pull back in gold, which I've kind of been thinking we were going to do so for a while, so I've been definitely wrong on that. But if we do end up pulling back at some point in gold, I'd be looking for support, basically these former highs, 12.19, 12.18, 12.19. So if we get a pullback, which from here is $20, you're going to get it. I would think that you get a pretty good dollar yen bounce off of that, and then by the time you get down here is probably when you'd actually be close to some sort of resistance in dollar yen. But yeah, we are testing, we've got big stuff up here, 1240, 1250. 1250 is the Brexit low, 1240 is the low from October. This is the old channel, okay? So it could be here, it could be more like here, but you get the idea. We're at 1240, 1250 is a big area for gold. At least I think so. And I'll be looking for some sort of response on that. So maybe a final push into 1250 gets you down into 100 pips lower in dollar yen, maybe before you get the low or some sort of a low. So that's my thinking there. Really, dollar yen, I'm just kind of 110.75, 111. And again, last February low right here, February 11th, right? That was the low. We are going to February 9th tomorrow, so we might end up actually making a low virtually on the same day or very close to it in dollar yen this year as we did last year. And then when I look at the, as you know, the intraday or shorter term chart, 240, same stuff on here. This would be Friday. if we can hold up and then get down into that low by Friday. But if we came in today and rallied some, I was willing to sell dollar yen up here, but we haven't done it. We haven't rallied, right? You can see all the rallies were all failed at the weekly opening price, right? For the last 2 days, every single pop fails right there. Weekly opening price 112.44. Okay, and that's dollar yen. What else? Look at dollar CAD. Dollar CAD. You know what I like here? Long side. So we finally turned up after following all those, this parallel and trading on it for 4 days. Dollar yen finally turned up as crude finally starting to roll over some. We have a long going on right here from 131.40. So we got a pretty good entry as far as today's range is concerned. Low today is 38. So we were just triggered on that. The reason I tweeted out that I wanted to cut the position size in half is because I was looking for the market to trigger it a very specific way, right? I was looking for once you got once you had the inventories came out like right here, 9:30 came out right here. Okay, inventories came out and crude actually spiked, even though the number was supposedly very bearish for crude. Either way, I was looking for a very quick move lower and a very quick move higher. I mean, that kind of happened, but it was more in slow motion. So I'm looking for a quick move lower and a very sharp move higher, and then maybe move some to break even. It didn't happen. So instead, I want a position here because I do like the idea of dollar CAD higher off of this support, as well as crude lower off of this resistance that we've come off of. And of course, I sound like a broken record, but as you know, we do have an all-time record speculative long position in COT and short and commercial hedgers. So the ingredients for a dumping in crude oil are there. And yes, you can get decent entries with the moving average, apparently. No, you can see that the 20 and the 200 are right here, right? So that's one of the reasons we had 31.40 as the level. If I go real short term on this, you also have my favorite setup, which is the channel, top side of a channel, right? So if we draw the channel here, draw the channel in, you know how this works, right? Channel becomes resistance, channel resistance, actually was resistance for like a couple hours and half a day. And now we're coming into the level that should be support. So we could still sneak down a little bit lower. I put 31.30 as maybe support, where this line is right here. But I do like dollar CAD higher. Lots of reasons why. This is the short-term one. All right, and then finally, look at these square root levels and how insane dollar CAD has traded on these levels so far this year. The low for the year would be 1, 2, 3, 4 levels down, 4 square root levels down. Okay, is 29.78. You can see that the low was so far 29.67. And we actually, 29.78 was actually support on February 2nd. Okay, and then The high yesterday is to the tick at the second square root level down at 32.10. So if we do get going on the upside, I'd like to say that we could get to the year open at 34.40. That would be a dream, wouldn't it? But there are plenty of levels that I'm aware of for, trouble, if you will, and chief among them would be 32.68.69, and that is the, as written yesterday, that is the close from January 18th, which is a high volume level for the day. One thing that would be really nice, though, about the year open at 34.42 is the fact that that level would also coincide or intersect with a new trend line, if you will, right? Bearish trend line from the high from last January and last December. So, I like looking higher here in dollar CAD, but 34.40 would be an area actually that could end up putting in a top. So, be nimble, right? Be ready to take the other side if you get a chance at the right area. So that's the dollar CAD thinking, right? Like it higher now, but for how long is a question. Maybe through February, right? Dollar in general might be the way to go. Okay, Aussie and Kiwi. I mean, Aussie guys, I've got nothing new to add here. Acting very positive, obviously, on a short-term basis. Every pullback kind of holds up. But, we are in the area of resistance. 77.05, 77.19, right? That's the big area. 77.08. That's the weekly reversal level, weekly reversal resistance. Of course, 77.19 is the highest 52-week close. We went over that a lot last Thursday's webinar. The short-term stuff, which I'm still looking at this, right? This stuff right here. Was hoping for 66. We'll see what happens with RB and Z. Maybe you get a slam of sorts lower if, just by association, with Aussie. But if RB and Z comes out and Kiwi comes off, then maybe you do get Aussie to come off a little bit too. But yeah, still following this stuff, right? You've got the 76 region still kind of support to focus on. I really just don't see a trade right here, right now. Last night, this was the Asian first half of Asia bar last night, this little 4-hour guy. If we would have come in and made a low on here and then turned up with this 4-hour bar, then I'd be willing to be a buyer against that level. But I'm not right here because you didn't do it, right? You want to see the market come in, stop whoever out, and then you get an idea to, go higher as there's people that are going to get back in the trade. Other consideration here, of course, is that if we do correct lower for a bit, and it's kind of a choppy sideways correction, we're going to have this back in play, which is 75.24. That's the December, if you recall the December high, that was FOMC high. And obviously you've got the horizontal levels here. That would line up as well. That would be next week if we were to get that, right? So end of the day, it's kind of like all about these slope lines here, right? Still have resistance up here on the red one. Watch for support on the blue one. Better support probably down here though. So, sorry I can't get much more specific right here on this, but that's just kind of the way it goes. For our RSI, still very bullish, right? Overbought, and the lows aren't even getting to 40. So it may be that the low we want to buy, we get to 40 and then turn up. Kiwi, we have RBNZ coming up here in several hours. And as you know, we are at big time resistance there as well. Tons of stuff here. You've got the old channel, right? You've got the long-term parallel. You've got seemingly not endless, but like 3 or 4 spike bars here with long wicks over the last 2 to 3 weeks. You've got the 5th square root progression is 73.43 reached in a month, which usually is pretty fast to reach it. There's just a lot up here for resistance. I want to be short, but again, got taken out, and you still have RB and Z, so I'm not really down to just play guessing games. RB and Z, you could still follow something like this. You might say, how come you're not so bullish Kiwi? Because the RSI is holding 40. It is, but here's the thing. Aussie RSI at the highs, at the price highs, Aussie's been pushing up through 60 and 70, or 70, I should say, right? Whereas Kiwi has not been of late. It has not been pushing through 70. So this RSI profile is one that's much more sideways range bound, if you will, than necessarily just outright bullish, right? But for Kiwi, the short-term stuff, somewhat similar to Aussie with the short-term slope. I would watch this off the first 2 lows. You can see the extension, the parallel off of this one was support here. Even off the high was resistance up here. Again, stopped out up here, unfortunately. But with RB and Z tonight, or in a couple hours, you might still want to watch this stuff. This would be closer to the center of the, if this were a channel, then this would actually be closer to the center. Okay, so yeah, I'm looking lower in Kiwi, but again, RB and Z on tap. Not trying to just jump into a trade before it. Let's say that it comes out and you do get an initial reaction lower. Remember, the high volume level for Kiwi is 72.80. Okay, and here you can see right here, that level right there. So if we can get back below there, go to 60-minute chart. If we can get back below 72.80, there it is, FOMC. That's the FOMC level right there. Did I say FOMC? Yeah, no, not FOMC. Yes, FOMC, sorry. That was that bar. So you can see how it's continued to actually hold up. Right here, right? The last couple of days, you've either reached it or come a couple pips, within reaching it. And if you can get back below that region, then I would be gunning for 71.60s, 71.70s. Okay, so we'll see how RB and Z comes out. You get a sharp drop, and then if you get a little bit of a snapback, which often happens with these news announcements, then I'd be looking to sell that 72.80 to 73 with a stop up here again. So that would be the plan for me. That is the plan for me, I should say, heading into RB and Z today. I guess when it comes down to it with the Aussie and Kiwi, with Aussie, they're both at long-term resistance levels, but with Aussie, I'm more kind of likely to err on the long side on dips and look for support than I am trying to catch a top. With Kiwi, I'm more willing to go try to catch a top or sell, trade a reversal on the reversal lower. And that's about it there. with those two things. Okay, what about some crosses? There's some interesting crosses out there, notably some of the commodity ones. Euro Aussie is one that's awfully interesting. Here we are with the median line, the never-ending median line, and we're still at it. We actually broke it this week. Very hesitant to try to chase this lower, and for good reason apparently, because it's reversing today. And as you can see, putting in a fairly long bar down here. Not only that, we are at progression, square root progression number 5. In fact, today's low might be on it to the tick. What's today's low in Euro Aussie? 39.38. The square root progression is 39.35. So we are potentially finding some sort of a low down here near term for a bounce in Euro Aussie. Levels for resistance really probably are on these former lows up here, all this congestion area, maybe all the way back up at 41.80. But yeah, that might be a long scalp, if you will. Obviously, Euro Kiwi coming into another support. It's seemingly been, coming in on these levels for a while. But here we are. This is the same, we've looked at this slope before, right? This is the one that, and we still have this impulsive rally down here, okay? So 2 levels to pay attention to. Really, you've got 44.80 down here. That would be about the lower parallel, right? And that's based off the trend line up here. You could just connect these lows as well. That would be a little lower. So at some point, Euro Kiwi will probably be a great trade like it was back here, because this is an impulsive rally. You're getting corrective weakness, but it's gonna, it's not gonna let anyone on easy, is it? And that's true for Kiwi weakness in general, I think. I thought we had maybe caught a top with this recent Kiwi short, but no dice. So yeah, level to watch, 44.83. Ultimately, 143.03 is the weekly reversal support level for Euro Kiwi, and that's a level that I would pay attention to. Okay. Pound yen. Did a write-up on pound yen comparing or looking at the situation with with what it was doing back at the lows in 2011, 2012, right? And a very loose, at times tight, but generally loose relationship, similar shape, right? Recovery high, sharp drop, rally, and then, kind of starts to leak lower, and then it just falls apart. So we talked about the way to trade this, or to approach it from an entry standpoint, is to draw this fork in right here, right? Because what you're going to do potentially is kind of spend a lot of time trading between 25 line. We were down below it yesterday for a while, of course, but we did reverse down below the 25 line in the upper parallel. And what you want to do is you just want to follow the upper parallel for resistance. Okay. So I'm very much still on this, or thinking about this, and if we can get it over the next day or so, then you have really a really good setup, because you've got good horizontal stuff up there anyway. I mean, the monthly open is 41.86, right? That would be up there in the next few days. You got the low from 12.29 is 42.15. That was, that was resistance up here earlier in the year as well. We're bouncing off a good level too, right? Back here, high on 9.2, low on 11.29. So you have good levels to work with pound yen, right? If you were, willing to look for a shorter term long position, then you could be looking toward, like I am looking towards this level, but just because I'm looking towards a certain level doesn't mean that I have to be long that specific market or short that specific market, right? It's all about the setup. So if you were to get a deeper pullback let's go to a short-term chart. Okay, so here is the 4-hour chart. This is the hourly chart. All right, so let's just throw a fib on there because you've got a impulse rally. 139.35 would be your 61.8. So maybe if you were to get back down into 39.35 or even 39.20, 39.20 is a square root level. It was also the low back here, secondary low, after the big gap lower and then May's testimony, right? BOE. So 39.20, 39.40 support, 41.86, 42.15 resistance. So there are good levels to work with in pound yen as well. And that might be a way to trade any sort of cable strength from down here, considering that I am kind of looking for a dollar yen low. That's probably, as far as crosses are concerned, pound yen actually probably has some of the best price levels right now to work with. What else shall we take a look at? EuroCAD is an interesting one. We had that piece there written on Sunday as well in the update, and we looked at EuroCAD essentially kind of in a copying pattern, right? It was repeating itself, and you can see that right here too. And it looks like it's starting to happen again as we are moving higher in EuroCAD. Again, you notice that, and I talk about this all the time, you notice that I don't necessarily trade just because I put up an idea. I'm not going to trade it, right? Like Euro and EuroCAD, for example, I like looking for the Euro buys on Euro support, like this morning. And I like being long dollar CAD because of everything I've said. So that essentially has me, long Euro CAD towards that direction. But yeah, if this is going to work, you're going to go, one more move higher in Euro CAD. And I do think that these Euro commodity currencies eventually do break down, but the meantime, they continue to trade in this range. So I would continue to kind of respect that range. And there's going to be good resistance for these things. You've got 42.30 as a level, maybe even a little higher, 42.40, right? And you can see how I'm getting that. It's your daily reversal resistance, right? The high of the move, the close of that day. How that worked down here as well. What's the low of the day, or the low of the move is this day here, December 12th. What's the close of that day? 39.62. What was support recently? 39.62. Almost got it 2 days ago. Didn't quite get it, 7 pips away. But you can see the logic there. So what you'd be looking at then for resistance moving forward be this high up here and the close of that day. Okay. All right, let's go to some commodities real quick. Take a look at silver, copper. Much more of a safe haven day in the metals. You are seeing, for example, gold outperformed silver. That's kind of has been the case for most of recently, I should say. Getting really short-term divergent signals, by the way, on dollar yen right here. Haven't seen that since yesterday, where we had it at the highs right here. That was a high. Have it right here. Could be a low. Had it down here. Had lows. Obviously, they don't all work because you had it here, it wasn't a low. Had it here, it was not a low. But quiet trade. Sometimes it's not like a big news event's driving this stuff right now. So in my opinion, that gives a little better chance to maybe work out. Let's take a look at, what did I say I was going to look at? Oh, silver, commodities. Okay, so here's gold. We already looked at that. 1240, 1250, this thing is really strong, but, former lows up here, looking for it to see some selling. We'll see. Silver continues to act really well. Really don't have anything else to add here. I know last week we talked about silver being bullish, and if we can make our way higher into this trend line, and this former low up here is 1837. Okay, that is where I'd be looking on the upside, right? Right here, because you've gotten back above this parallel, which again was support and then resistance, and then we were down below it last Friday and closed back above, which was a good sign. So if you can pull back into this region, I would be looking for that to be support again, which is 1749. Okay, if that doesn't hold, then your next level is this parallel. So just pick your spots, right? It's this trend line up here is resistance. In my opinion, looking at resistance at about 18.3, and then support here is about 17.5. Okay, copper still toiling at the top of its range. Again, I don't have any reason to suspect that that's not going to remain the case. I've held for a while that we are going to stay in a range. I still feel that is the case. In fact, you do have an impulsive drop here, and you appear to have a corrective advance here. You could get one more little push, maybe 1, 2, 3, 4, 5, maybe one more little push before you roll over. But to me, copper up here is at risk because, again, you are at resistance. You actually have retraced 618 of the decline perfectly, 269. So, yeah, I'm still looking down towards support, okay? Nat gas, let's see, haven't looked at this. Same thing here, folks. Still have support on this trend line down here is what I would be looking at. We talked about it last week, but for the former highs, the former resistance levels, horizontal levels line up with these towards the end of this month. So it could be a case where you are chopping back and forth, and then you might just want to check in on nat gas at the end of the month and see if you are at the confluence of horizontal support and the trend line support. And if you are, then great, right? Look for a long position off of that support. But in the meantime, nothing to do here, right? It's been a very active market, obviously, and I'd be looking for it to come into support and for that support to hold because, again, strong market up here, pushing through resistance. So you're looking for support to hold. And that pretty much does it for me on, what I've got to go through. Are there questions? Excuse me, are there questions? Anything you guys want to look at? Oil, yes, sure, Conwall. Oil, let's look at oil. Okay, oil. So crude. rolled over after I think we actually looked at this last webinar and it was at resistance at that time, and we've rolled over and we've come now into support from this channel. Same thing. We've bounced today, right? I'm bearish crude oil for many reasons that I've mentioned, and I am looking for it to continue to drop, but you know what? The market's finding support down here, so it is tough to just be bearish in the face of the market finding support despite supposedly very bearish news. Okay, let's see here. I really have nothing to offer at this point right here on crude oil. Okay, I mean, we are in the middle of, absolutely the middle of the range right here. Okay, so let's see what the 618 of this would be. About the only thing I would pay attention to on this right here would probably be the 618 of this decline, which is 53.12. Right. Other than that, I just don't. There's nothing here to look at for crude oil. I mean, sometimes the market is in a spot where you can make a call. Sometimes it's just not, and this is one of those where it's just not. You know, the big picture that I have is looking lower because of the COT, and I've talked about it a million times. But the COT, you know, is a record. Okay, it just typically doesn't end up well with that, but you can hold up for weeks or months at a record, and we've done that. Okay, stocks, and Gary's asking about a dollar-yen retracement. So we will look at, let's see. Let's go to U.S. equities. Oh, shit. Did I lose all that stuff? U.S. equities, well, actually, you see where today's low is? It's a month open. I mean, it's really a dead trade. This is the S&P cash, but this is it's just dead. I mean, nothing's going on here. Kind of hard to sell a quiet market, but kind of also hard to buy a market when it's up here too. So, you know, for U.S. equities, I see nothing. I mean, really. You know, short-term trade. Here's the futures. 22.77 is the month open in futures, so you might want to pay attention to that. It's also the high from 1.6. Okay, you'd have to have the market drop below there in order to even have you negative on the month to even give you any sort of reason to be looking on the downside. But U.S. stocks, I mean, it's a dead trade. It's nothing. It's just not doing nothing. It's, you know, it's literally, it's like it's Saturday. The longer term charts are posted. That's really, you can see my thoughts on U.S. equities there as far as the levels are concerned. You know, you have these long-term levels, and here's the S&Ps, right? If we end up topping in May, it could be 24.59, 24.85. At the same time, 26.04 should be support. Okay, so right here, pretty tough to do anything because it's, I mean, you can't really analyze a market that's dead. And yeah, that's that. So yeah, I would be looking at 26.04 for support. Okay, and 26.04. 26.04. What the hell am I talking about? $22.04. Sorry. Yeah, 22.04 for support. Okay, if you do get a pullback at any point in the next number of weeks, and then eventually higher into that May high. And finally, Gary is saying the abomination. Gary's asking where should I draw a long-term fib? Well, you know what I'm looking at? I'm looking at this 110.75 for the big support. As far as where a yearly fib, I'm not a huge fib guy. I prefer to kind of look at the market levels. Like this to me is more important. The fact that these were big lows back here, back in 2016, is more important to me than any sort of fib. I don't know if I draw it off of there because that's the Brexit spike low. Go off this one, which is more the real low, closing low, August 2016. Yeah, it'd be 109. See where if we were to draw off of, say, there's a long-term fib. You didn't really hit the fib, but you hit the 50% level. 38 is 106 and change, and doesn't really look like there's anything there. So yeah, Gary, I don't think I can give you a good answer on that. Maybe ask Mike about the yearly or the long-term fib. He's more of he's short-term, but he's more into Fibonacci stuff than I am. But yeah, that's about it for me as far as any sort of fib stuff. All right, so on to RBNZ. I think it's in 2 hours. And again, I will leave you with a quick thought on that. For RBNZ, the way I'm looking at it is I would, kind of like to see the market if you get a negative reaction, don't chase it, but look to see if you can get a resistance back, into 72.80 to 73. Okay. Really 73.10 is the month open, so that's a good level. 73 is a high volume level, so is 72.80. So you have a zone there of 72.80 to 73.10. And if you get a negative reaction immediately, don't chase it, right? Instead, look to sell on a snapback into that area, 72.80, 73.10, okay? So that's how I'm approaching Kiwi going to RBNZ. It's in 2 hours. Levels that I'd look for support, again, probably down near 71.60. We had the short-term slope there. It's also the 123 low is 72.55. And yeah, that's it. So if you're trading RBNZ later, then good luck. And I'll be on Twitter, of course, and I'll make some comments if the markets require them. All right? Okay. All right. So take care, everyone. Later.